Hello traders, Gary Wagner here. It is Friday. Happy Aloha Friday as we say on the islands. It is February the 12th, 2021, and this is the daily report for gold and silver. A very interesting week in silver in which we saw a negative correlation between gold and silver, with silver really leading the way. We'll talk about that in detail when we look at our studies, but let's begin the show right now. Traders, as we close out the week, we do have a fractional decline in gold pricing, 1824.80. This bases the most active April COMEX contract. We are long gold, but in terms of our entry price, it is above current pricing to the tune of about $8. We'll talk about that when we pull up our technical studies. Traders, this first chart that we are looking at is a simple daily candlestick chart of gold. We can easily identify different levels of support and resistance. What is most noteworthy when I look at this chart is that following Thursday's dramatic decline, and that came in just above $1,780 here, we saw 4 consecutive days of green candles and higher pricing that culminated with a challenge of what I'm considering to be the first level of resistance, which is composed of a combination of both the 50 and 200-day moving average. As we spoke about on yesterday's show, it seemed imminent that these two lines could cross, creating the purest form of a death cross, which on a technical basis is extremely bullish. But as you can see, over the last couple of trading days, we have had these particular moving averages begin to at least move in a parallel relationship with each other to actually beginning to widen. Above that, we have to look at 1872, and that is the 100-day moving average. In terms of support, I am pegging major support right at the low that was achieved a week ago Thursday. That came in at roughly 1770, and then the current low of the day that came in at $1,824. And traders, while it is quite clear that we have seen gold pricing soften over the last couple of weeks, in essence, it has been softening since we hit the high at 2,088. Of course, that occurred back in March of last year. And when we start from that area in March, and then we take our Fibonacci data set all the way to this record high, what you'll see is that it has hit a 50% retracement. That was back in November and is currently tracking just above that. It has made stabs, and only on one occasion on a closing basis, above the 38.2% resistance level. So in terms of absolute resistance on the top, we have 1844, and above that, we have 1938. And traders, for those of you who are familiar with John Bollinger, the creator of Bollinger Bands, and also I was honored that he wrote the foreword to my book in 1994, Trading Applications of Japanese Candlestick Charting, what we can see from this study is that for the most part, we have been following the Bollinger Bands. We have broken above it on this one occasion here. We've broken below it on this occasion here. But for the most part, recently, it has really hugged the bottom of that Bollinger Band as a level of support and hugged the top of the mid-band as a level of resistance. When we convert this Japanese average chart into a Heikin-Ashi or Japanese average chart, what we can see is easily that we have a scenario in which we have a series of red candles, followed by a series of green candles, followed by a series of red candles, which means that we are absolutely in a consolidating trading range. Traders, we have seen a strange occurrence or negative correlation between the way gold and silver pricing change from day to day. On a typical basis, there is a positive correlation where if gold moves, silver follows. In other words, if gold moves higher, silver moves higher. That changed a couple of weeks ago, in which we had a negative correlation, and we would have days where silver would move higher and gold would move lower. Such is the case today. We are looking at March silver futures up 40 cents at 27.45. That is a full 1.5% gain on the day. We are long silver futures at 27.36, so we have slight profits on the trade, and we have a protective stop at 25.88. Lastly, we are long SLV, and we entered that really in two legs. The first leg we entered was at $22.95 per share, and then we entered another leg at $24.60. Both first and second leg are currently in profits. And the differential between the way gold is trading and silver is trading, sometimes in tandem, exaggerated, and sometimes running the opposite manner, can easily be seen in the 780-minute line chart. For one example, we see this tremendous spike that came in at the end of January. And when we look at that, it was nowhere near the spike that we saw in gold. When we look at the drop in gold, it was not nearly as shallow as what we saw in silver. This is me, Gary Wagner, wishing you, as always, good trading. And please, if you are able to, perform one act of random kindness this weekend. Have a great weekend. Bye-bye.